welcome. I'm Kavita Thapliyal and you're watching The Money Show, and within that we have a very special segment today with March 31st deadline fast approaching. It's very important for you to ensure that you have invested in the available tax saving options. It's important for you to review your financial situations, look at the available and eligible schemes where you can put in your money, finalizing your deductions. So a lot needs to be done and there is less time, as we all know. Let's get on board Arnav Pandya from Money and You School, and let's talk on, taking stock of your interest income. So Arnav, how can one go about it? Because you're talking about the interest income that you have made from savings account, from your fixed deposit, from your recurring account investments. How important it is for you to kind of collect this information and then to declare it as well, and how can one do it?
So the most important thing here is that you need to first at least know that you have earned this income and then declare it. Because there are a lot of times when people just miss out on this income. For example, when it comes to the savings bank account, the savings bank interest which is earned is usually quite small. So people do not pay much attention to this, and with the end result that this is left out at the time of their filing of their returns, and which leads to a mismatch. Similarly, when it comes to the fixed deposit, see, not all fixed deposit interest is paid out during the year. There are some deposits where the amount is actually accumulated. So you only get the amount at the time of maturity of the deposit. But this interest is actually accrued during the year, so it is earned during the year, and that has to be shown as income for the year, because when the bank sends this information to the tax department, which is then reflected in the AIS, this interest will be reflected, and if you don't show it, then there will be a mismatch. The similar case happens with a recurring deposit, where the interest which is earned will be paid out only at the time of maturity. So the first part of this equation is that you actually record. The second part which comes in is that you record actually the right part of it. So when it comes to the savings bank account, you need to actually get the figures for the year and then show it at the time of filing of your return. When it comes to the fixed deposit, the thing is that you need to be extra careful on this front, because there is likely to be a TDS for higher amounts, and when that TDS occurs, you actually need to show the right figure in your income. So for example, say you have an interest which is earned during the year of 1 lakh, and there is a 10% TDS on it. So the amount which comes into your bank account is actually only 90,000. Now if you take this 90,000 and show it as your income, it is not the correct figure, because the income that you have earned is actually 1 lakh, and that is the figure which has to go in under the head of income from other sources. And the 10,000 which has been the TDS, that is the credit which you can claim along with your various other additional TDS figures. So this is the right way to show it, and which is what one should try to ensure.
All right. Now, talking about the TDS deduction and also filing of these things as per Form 15G and 15H, how can one go about it?
So, Form 15G and 15H ensures that if you as an individual have a income during the year which is not above the taxable limit, then you can ask the bank or the other institution where you have the deposit to ensure that there is no TDS. Now, the thing is that since this is the end of the financial year, you cannot give a new Form 15G or 15H for this financial year. So, if you have already given this kind of form at the beginning of the last financial year or whenever the deposit was made, then there would be no TDS. So, this you need to keep in mind. If the form was not given, then the moment the income has exceeded the threshold level, the TDS would have been done. So, one thing is that check for this, because that will tell you whether there is a TDS or not during the year. The second thing is that at least you can ensure that starting next year you give the form as early as possible, because if you have once given the Form 15G and 15H, it is valid only for that particular financial year. So this thing, if you keep in mind, you will at least ensure that your job of getting the right income figure for your tax calculations are correct, and that you are able to do it in the right manner.
All right. This brings us to the end of this particular segment. Thank you so much, Arnav, for being on the show today. Thank you.